Yo, what's good, boys? Um, another day where I have not traded. Honestly, I'm not gonna lie to you, boys. My sleep is getting horrendous. I'm gonna keep it real. A psychology video is much needed. Um, and yeah. Anyways, we won't shift our focus. We're just gonna do the same video we did yesterday on how to backtest futures price action. Um, and yeah, that's gonna be what we're doing. So obviously today we had PPI and consumer sentiment at 10. So we had this at 8:30, this at 10. So we'll start on NAS. What you want to do first and foremost is change this to 1. Change it to... Okay, so what you want to do first and foremost is you want to mark up your daily opening gap. So we closed here, we opened here. Do that on the S as well. Closed here and open there. Cool. Now I've got our daily opening gap drawn up. We can then go on to the 15-minute and we can mark our data high, data low. Data low. There we go. Especially on news days, obviously like this, you want to mark your data high and your data low. Cool, so we mark them both out. We've then obviously got our New York open, which we can mark. We won't need to mark that, we'll just go to regular trading hours. So yeah, we've got data high, data low prior to regular trading hours. Data high, data low again. Now we can go on to regular trading hours. And what you can also do is mark up previous day high and low. There we go, and yes. Cool. So we've got our nude opening gap, a day high and low, and our previous day high and low. So now we're going to go on to 5-minute time frame, onto regular trading hours. And as you can see, we have a premium new opening range gap. So we closed here. Open now. Bang. That doesn't make any difference. But anyways, yeah, so this is our opening range gap. Do that on ES. as well. ES had a tiny one. Yeah, ES had a very small one. Okay, so now we've got all the elements that we would need on this. We've obviously seen from the open, because from the open you can see where price is. Our opening range gap is next to or near market open. Also, we've got a tiny opening range gap with NQ. We've got a larger opening range gap, and my monitors is okay. Got a larger opening range gap, and our new day opening gap is a lot higher up. So this doesn't just line up with that. Data high right here lines up with the opening range gap and close to the new day opening gap. ES is way above. So yeah, we're just gonna back test price with all of these elements on, and yeah, so let's do it. Okay, so on ES there's not really much to see on the 5-minute time frame. I'm on the 15. We get market open right here. We don't really do much at market open on ES. I would have said this could have been a big, good liquidity grab. As it's inside this imbalance, it's just been closed. Obviously we're sweeping out data low, and 9.15. We just come from data low at 9.25, so we touched this twice. Can now measure this wick, because as we know, wicks are gaps, and this is a big wick. We come down to the lower quadrant, touch it by the tick, also where data low is. So that could very much be our draw on liquidity. Or not our draw on liquidity, our liquidity sweep. I can delete that now. There we go. So we've got data low and the lower quadrant of the wick being tapped into at 9.25. Now at 9.30 we get a CSD straight off the rip, and we do have this imbalance. This is also the first imbalance. Well, not on the, let's have a look on the 1 minute. Yeah, it's the first fair value gap of 9:30 open. So this would have been a good place to buy from. You can see upper quadrant of that right there. They had entries on here. Stop loss can go below the second wick, and targets can be, we'd already taken out data high, hence for the large retracement, the quick retracement, so we could have had our target on previous day high, and bang, that's a simple trade. Obviously run higher, but is it all that relevant? Not really. Yeah, ES was quite small today. because of that opening range gap being so tiny. But yeah, I mean, that could have been your trade on ES. Like I was saying on NQ, it provides a more expansive move due to the opening range gap being larger and the nude opening gap being just above it. This is tiny and above it, but you know, so yeah, that could have been your trade. Pretty easy trade, to be honest. Changes to like. There you go. And there you go, there would be your back test screenshot. You've got everything you'd need. You've got your data low, 0.75 the wick, you've got your draws on liquidity, and you've got your entry model, CSD, first fair value gap. Yeah, hence why we didn't come back all the way to the CSD, because the CSD was the first fair value gap. If we'd have looked for trades within the macro, so we can delete this now. Wait, I'll put that in my back testing journal. Right, we can delete this now. Delete this, make it look cleaner. We can actually keep that. Now my eyes instantly draw to this down close candle as we close above it at 950, meaning this is now an order block. Bang. We also retest the data high, and that would have been enough for me. This would have been a good entry, as we've just retested the data high and we've got a draw higher. Stop loss could be the body or halfway. We'll measure this first, so you could have had it here or here, or could expand that a bit lower. You could have had it here or here, as we covered that bottom wick as well. So we'll just put it there, and easy take profit would have been to here for the previous day high. So we can put our old trade back on. Copy link. There we go. So we've got two trades right here. So we've got the 930 trade, and then we've got the macro trade. So that's it for ES. We can delete these now. Onto NQ. Okay. So we'll mark our macros up. There we go. So, a bit messy, but it's okay. So, as you can see, we come close to previous day low. I do wonder if the Dow Jones no, it didn't. Okay, cool. So yeah, we just didn't come to previous day low. What we can measure though is, you know what I'm about to say, we can measure the wick of that. Damn, this is getting messy, but it's okay. Make it red. Okay, we're back. I'm going to cut out that bit as I just went downstairs and I was waffling just before I went downstairs. So we're just going to see back. So what we just did, well, I should cut it at the right time. But anyways, as we marked this daily low, we also marked the wick of it. Because sometimes it doesn't need to come to the full daily low, it can just fill it in a little bit. So that's what we've done. We put it in red. Delete that. As you can see, we open, we apply around the 75% of the wick of the daily candle. We get our CSD right there. My eyes gravitate towards that within the macro. That would have been honestly the best trade you could have took, because at 9:45 we get the CSD, and then we wouldn't have traded until the macro. So yeah, that would have been my eyes lighting up for that long. We'll mark, get that other drawing back. We're gonna put there you go. 75% previous day low. We then get our CSD within the macro. Could have had entries on the CSD. Stop loss. Stop loss would have to be, let's change that back to black. Stop loss would have to be below 50%. So if you did put it in the upper quadrant, you could have got stopped out. If you just put it at the low wick, you'd have been fine. But what we are going to do is, due to us having a bigger opening range gap and a better daily opening gap, you could have scaled down to the 1 minute to be a bit more precise, because this would have been consumer sentiment. So what you could have even done is, and yes, this is all in hindsight, but this is just me working as I speak, you could have waited for consumer sentiment to come out, to not end it there. You could have then seen we're still in the macro. Could have got a CSD there. That could have been your entry. Long, bang, stop loss. At least below 50% on the upper quadrant. right there. So you already had your 5-minute CSD. You then could scale down to the 1 minute after the news, because what news does is it takes liquidity and then pushes up. So we've tapped into our CSD and then we pushed up. We've got our, technically this wouldn't be a CSD anymore. Sort of would, but it would be an order block. And you could target upper quadrant, data high, full, daily opening gap, and you would have been content. So yeah, this is all hindsight, but this is just me speaking whilst I work, seeing different types of stuff, and yeah, so put on a little call out, news, and yeah, we had a lot of draws of liquidity up, and that would have been your trade. And yeah, very high probability trade, due to the fact we had higher opening range gap, we had a high daily opening gap, and we had a good range to work with. We had consumer sentiment come out, then that wicked down into our 5-minute CSD, and then we make an order block, tap in, bang. So yeah, that would have been how to backtest Friday the 11th of October futures price action. I hope you enjoyed, and I'll see you guys in a bit, and peace.